Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 12th of May. Let's dive into the week's stock market news. Europe markets react to central bank moves and economic data. European markets navigated a week influenced by central bank decisions and key economic indicators, while broader sentiment received a boost from hopes of de-escalating trade tensions between China and the United States. The Pan-European Stocks Europe 600 index edged up by 0.29% in local currency terms, marking its fourth consecutive week of gains. However, performance across major national indexes was mixed. Germany's DAX showed strength, advancing 1.79%, and Italy's FTSE MIB saw a significant gain of 2.72%. In contrast, France's CAC 40 index registered a slight dip of 0.34%, and the UK's FTSE 100 index eased by 0.48%. A notable development came from the Bank of England, which opted to lower its key policy rate by 0.25 percentage point to 4.25%. The decision by the Monetary Policy Committee was not unanimous, with a 5-4 vote split. This division, particularly with 2 of the 4 dissenting members favoring unchanged rates, led markets to temper expectations for a third rate cut within the year. The minutes from the meeting also revealed that most policymakers considered the May decision finely balanced prior to recent global events. The BoE reiterated its commitment to a gradual and careful approach regarding future policy adjustments. Elsewhere in Europe, the central banks of Norway and Sweden maintained their current interest rate levels but offered signals of potential future easing. Sweden's Riksbank kept its policy rate at 2.25% but shifted its outlook, suggesting easier monetary policy could be on the horizon. The bank abandoned its previous stance of steady rates, citing increased downside risks compared to its March inflation forecast, largely due to the uncertainty stemming from new U.S. trade policy. Norway's Norges Bank held its benchmark rate at 4.5%. emphasizing a cautious stance as inflation remains above its 2% target of 2%. Deputy Governor Paul Longve commented that lowering the policy rate prematurely could lead to continued rapid price increases. He added that the committee's current assessment suggests the policy rate will most likely be reduced sometime in 2025. Economic data from Germany provided a positive note. Industrial production saw a significant sequential jump of 3% in March, comfortably beating consensus forecasts. This increase was partly attributed to manufacturers boosting output in anticipation of the imposition of new U.S. tariffs. Factory orders also rose sequentially by 3.6% in March, following a flat reading in February. In the United Kingdom, the housing market showed signs of slowing down in April. According to the Royal Institution of Chartered Surveyors RICS survey, activity decreased following the conclusion of a tax break on home purchases for first-time buyers. The monthly house price balance declined to a 9-month low, and the number of sales recorded the largest drop since August 2023. Now our insight into alternative markets. Private capital's challenging 2024, fundraising declines and strategic pivots. In 2024, global private capital fundraising faced a turbulent year, marked by high interest rates, political uncertainties, and a cautious economic outlook, which hampered activity. According to PitchBook data as of March 5, 2025, there was a 45.1% year-over-year YoY collapse in closed fund volumes and an 18% drop in capital raised year-to-date YTD. This contraction highlighted operational difficulties in a high-cost financing environment and a growing preference for experienced fund managers, longer fundraising timelines, and a prudent approach to capital deployment. Prolonged monetary tightening, especially in the United States, dampened macroeconomic conditions, making it harder for managers to attract capital. Emerging managers faced significant hurdles, as limited partners LPs gravitated towards established players with proven track records, seeking stability. Fundraising activity in 2024 was weaker than the previous year, far from the peaks reached between 2014 and 2021. These difficult conditions forced a recalibration of strategies. Fundraising timelines lengthened, and capital deployment slowed due to a scarcity of attractive investment opportunities and limited exit options (IPOs and M&A). This led to an accumulation of dry powder uninvested capital, which is now aging, raising concerns about its future profitability. Conversely, secondary funds, which purchase existing stakes in private markets, thrived, offering liquidity to LPs at a time when traditional exit routes were stagnant. To cope with growing challenges, fund managers increasingly turn to technological data management tools to improve investor relations, transparency, and operational efficiency, as well as to manage dry powder and identify opportunities. Looking ahead, 2024 highlighted the cyclical nature of private capital markets, stimulating innovation and adaptation. For 2025, agility, experience, and technology will remain fundamental, with LPs likely continuing to focus on stability, liquidity, and data-driven transparency.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.